Now, the European Economics Commissioner says the deal between Greece and its foreign creditors is only a few centimeters away and that there is still room for negotiation between the two sides. Athens rejected proposals for a cash for reform deal on the weekend. Now, Pierre Moscovici wants Greece to reconsider its decision. He said all must be done to keep the country in the Eurozone. Moscovici said the president of the European Commission, Jean-Claude Juncker, will make his latest proposals later in the day in a bid to avoid a Greek default. The country only has a day before a deadline for the payment of bailout loans to the IMF. Greece has imposed capital controls throughout the country, with banks closed until July the 6th and ATM withdrawals limited to €60 a day. The country's stock market will also remain closed until July the 7th. Well, of course, there are growing fears of a Greek default on its debt and an exit from the Eurozone. European stocks have dived at the start of Monday's trading. The Frankfurt and Paris indices have shed more than 4%. Meanwhile, the euro dropped below $1.1. A similar trend is seen in Asian markets, particularly in China, Japan and Hong Kong. Chinese shares closed heavily down after a roller coaster ride. Hong Kong and Tokyo stocks plunged 3.63% and 2.88% respectively. Meanwhile, oil prices have also fallen, with the U.S. crude dipping below $59 per barrel to an almost three-week low. To discuss that further, we're now joined by Professor Keith Pilbeam, who is a professor at City University, and he's joining us live now via Skype from London. Professor, as always, thanks for joining us. Now, in the past, we've spoken about, of course, the situation in Greece with you, Professor, and you've been critical of course, the Greek government and the way it's acted. How do you feel at this point, a day before things are set to come to a crossroads?
Well, I think Tsipras has made a very bad mistake walking out of the negotiations. I mean, the gap between the two sides was actually quite minimal. And now you've put Greece into a very difficult situation. I mean, people cannot even access their bank accounts. Banks are closed for 7 days minimum. Capital controls in place. And basically, when you're a leader, you have to lead and make decisions in the interests of your citizens. And I cannot see that he's made a decision in the interests of his citizens.
But certainly what many Greeks, I would imagine, would say is that, what the ECB and others are offering is essentially more austerity, those kinds of things, which is the reason why Tsipras came into power to begin with.
Well, there's austerity and there's chaos. And what he's created is a situation of chaos in Greece. This is not going to help the Greek economy. It's not going to help the Greek people. And it risks participation in the euro. And exiting the euro will mean austerity will seem like a good outcome, a very good outcome. So I think he's made a horrendous blunder. I think they've miscalculated, and the consequences are very dangerous.
And of course, you're sitting in the UK yourself, Professor, and obviously the UK is not part of the euro currency itself. So I'm wondering, do you think in many ways that it was a mistake to begin with for Greece to even join this euro currency? And secondly, do you think it may not be a bad thing for it to leave it?
Well, it definitely was a mistake to join. we know that. Now, would it be a mistake to leave? No. Greece's interests lie in remaining in the euro. They need to do these economic reforms. They need to get to grips with their tax collection. They need to grow up. And this leadership, I think, has failed miserably.
Very well. We'll leave it there at that point. But as always, Professor, we appreciate your critical insight. That was Professor Keith Pilbeam, who was speaking to us live from London.